Hi everyone, and welcome to our Finance Talk. And I've got a special guest today. I've got Gianni Musumeci from Ryker Capital on the line. How are you?
Great, thanks, Dien. Yeah, really appreciate it. Thanks for having me on.
No, thank you for taking your time to come on and have a chat with us and the community, right? But the chat is really about introducing Ryker Capital to the community, because we've just announced an awesome partnership between yourself and our community of brokers, and how basically I want to have a chat to you in terms of how working with Ryker can not only make the broker sound more professional, but also has an ability to earn more revenue as well. So let's just get started. Tell us, Gianni, who are you? How long you've been doing what you're doing, and then obviously who Ryker is, and what you guys do well, and then we'll move to basically how brokers can help you, and you can help brokers.
Yeah, no, thanks, Dan. Look, Ryker Capital, we're relatively youngish in terms of financial planning practices. We've got about 4 or 5 years of history now. However, that being said, our financial advisors combined, we have more than 60 years of financial planning experience when you combine all of our heads together. Myself, I'm the practice manager here at Ryker Capital, and we have 5 financial planners on board currently. Like I said, we've got 60 years worth of financial advice experience. But when you add up all the support staff, we've probably got close to 100 years, in all seriousness, of financial advice experience. We are a family-owned, operated business. However, at the same time, we do have the breadth of a national institution. We've got offices in Brisbane, Melbourne, and Sydney, and then we have all clients all across the country. So clients as far as Adelaide, Perth, etc. as well. We are not specialist advisors. We provide a broad scope of advice. We provide a comprehensive and holistic approach to financial advice, looking at everything from life insurance to superannuation, tax, and financial advice strategies around self-managed super fund, aged care, and even some personal business insurance as well.
That's awesome.
So that's a little bit about Ryker Capital, really. How we do what we do, probably on the next slide. Mm-hmm. How we do what we do, we have a high-level 6-step approach. What we do is we look to understand our clients' unique goals and objectives. Normally, that's done in an initial complimentary consultation meeting. The next step is what we work with the client to gather those data points to understand the client's situation a lot better and help us paint a picture of the client's financial circumstances as they currently stand. We use that picture to then understand and analyze what comprehensive solutions that we can put in place to meet the client's goals, but also their needs and wants as well. And then the next step is that we review the client's plan and we discuss those recommended strategies with the client. That's normally in an advice presentation meeting. We move on to implement that advice, and then we look to monitor the client's ongoing situation via our ongoing service program, should our clients be eligible as well. But regardless, we look to keep touch with the clients on a regular basis, regardless if they're part of our ongoing service program or not, essentially.
That's awesome. That's something that a broker should be doing.
Yeah. How that fits in a broker's world on the next slide is really, I've looked to summarize a mortgage broker's life cycle with the client, really throughout this high-level process. Initially, we understand that mortgage brokers will have an initial consultation. They'll qualify the client. They'll provide a comparison and recommendation on loan products, and then they'll go through to the loan application. They'll then go to lender assessment and then have either a formal or conditional approval. And then in the final part, they will conduct settlement and conduct a post-settlement welfare checker as well. Okay. Essentially, what we look to do is we look to understand when to engage with the clients through these high-level steps. So initially, when a client presents to a mortgage broker via the initial consultation or in that qualification period, they may note that the client has inconsistent income. They may have longer term goals that are sort of 2, 3, 4 years or beyond. They'll have little to no deposit, especially for resi purchases around owner-occupied or investment properties. And then when they're going through the fact find, they'll need to discuss how they're going to essentially cover their debts and their lifestyle requirements via insurance as well. So that being said, we look to engage with the clients in that initial consult and qualification steps and look to help the clients out in that regard. The next couple of steps via comparison and recommendation is where you see that the client has multiple super funds, they'll have a declining superannuation balance, or they have a corporate or industry superannuation plan. This is where they've just been put into whatever standard industry or corporate superannuation plan that they have. They might not be in a product that's suited for them or best suited for them. In addition, they might be in a product or products that are diminishing their overall retirement benefit. And as a result, they might not be prepared for retirement. There's also initiatives that we can look to implement that will save tax as well as increase their retirement benefit. So we look to help the client out in that regard, ultimately making you their trusted source of truth and painting you as a solution provider through engaging us at these points as well. And then the last point when we engage is typically in the settlement or post-settlement period. Really, this is around insurance and other goals as well, such as retirement, wealth accumulation, or tax mitigation. Particularly insurance, because the clients begin to feel the impact of loan repayments on their cash flow, and they start to understand, well, what is going to happen if I'm unable to produce an income going forward? Because that's what we tell our clients as well. We're saying your biggest strength is your ability to produce income. And what if that's taken away through injury, illness, or God forbid, death? That being said, how are you going to meet your lifestyle requirements, continue to make loan repayments, ensure that your family members who are left behind are able to continue to keep up their lifestyle in that regard? And that's why we sort of look to engage with them on insurance again then. And then we also look to take care of some of their other retirement, wealth accumulation goals as well, and see how we can look to mitigate any tax implications down the track. All of this has a three-pronged goal, and it's around, for the broker, how do we increase your conversion rate from inquiry to settlement? How do we decrease the turnaround time from inquiry to settlement? And how do we increase client retention? And really, we want to help you meet those three metrics at a high level, because ultimately we know that 70% of loans are written by mortgage brokers. So we need to preserve your piece of the pie at the same time and build on that market share as well.
Yeah, absolutely. I can actually see another thing as well, which is if the loan doesn't proceed, the application doesn't proceed, and if the brokers engage with Ryker, then should the clients take any of your advice up as well, then you're actually going to get something rather than completely nothing. So that's just a thought there, because just for the basics of saying, seeing that the customer has multiple super accounts, for example, right? If the loan doesn't proceed, you're not going to get anything from the settlement of the loan. But if Ryker can help the clients, basically consolidate those super, and then basically, or potentially even rejig the super itself, because most people, have a set and forget super accounts anyway. And then they change jobs, and then whoops, there you go. There's another account that they didn't know about. So,
yeah, exactly.
Yeah. So that's
especially if you notice that your client is a job hopper, they may more than likely have multiple superannuation accounts. So that's a big impact for them down the track. Ultimately, we want to build on their ability to produce wealth, which is ultimately going to strengthen your position as a trusted source of truth and a solution provider. And ultimately, we see a lot of clients come in with longer term goals, or first-time buyers especially, or prospective investment property owners that are somewhat uneducated or they're financially illiterate, and they have longer term goals. They think that, the home purchase is around the corner, but when they see a mortgage broker, it's a lot further down the track. So we want to keep them with you. We want to decrease the turnaround time. We don't want it to be 3-4 years before they're transacting, because ultimately you're not getting paid for that work that you've done initially. And then we want to decrease the turnaround time. So if we can decrease that turnaround time between inquiry and settlement from 3 to 4 years to 1 to 2 years, or even sooner, through implementing wealth accumulation or tax mitigation strategies, then ultimately that's to your detriment. And then you're going to be double dipping on that client as well, because you're receiving revenue for the actual mortgage broking and your revenue share from the financial planning as well. So that's a big one. We see a lot through first-time buyers. We see a lot through people that don't know whether they're going to be rent vesting or purchasing an owner-occupied. And we do a lot of the modeling on that as well. Another question that we get a lot from mortgage brokers as well is, are we pro-property? And the answer is yes. We see a lot of financial advisors that actually steer away from property. And part of the reason for that is because they're not licensed to provide recommendations on specific property purchases, number one. And then number two, it's not on their approved product lists. So they can't charge for that advice. If it's within the client's wheelhouse, if it's in their goals, if it's what they're looking to achieve, we will provide that in the modeling. We can't recommend specific property purchases. We're not licensed property advisors, but we will include that within the modeling in line with their goals. We won't steer away from it just because it's not on our approved product list.
Yep, fantastic. All right.
Maybe just moving on to the next slide, around advice types and what to look for in a client file as well. We did talk a little bit about superannuation. So when you receive the superannuation statement for a loan application, there are a few triggers here. If the client presents multiple superannuation statements, if they have a superannuation statement with a declining balance, if you see that they haven't contributed to superannuation at all, these are all triggered for a review. These are all triggers rather for a review of their superannuation for their retirement benefit to ensure that they have enough to meet their retirement goals. So that's around superannuation. There's a few different triggers there. If you have any medium to high income earners, they earn a good wicket, they're paying excessive tax, and they don't have any contributions to superannuation again, they're not mitigating their taxation. So they're more than likely they're going to have a high rate of income tax, and they're not doing anything to mitigate that as well. Where you have clients that have expressed that they've recently sold an investment asset, investment property or otherwise, this may be a CGT implication. So there might be capital gains tax implications as a result for that client. And we can do a lot to mitigate the cost of capital gains tax on a client's on their client's financial situation as well. So where they're a medium to high income earner or where they have a capital gains tax event, this is another great trigger for financial advice as well.
Okay.
We hear a lot about... Sorry, yes?
Yeah. So can I just jump in and ask, because as a newbie, right? So when the word tax planning comes into play, someone might think that you offer an accountancy business as well, or is that completely wrong? Tax planning is not accountancy. It's slightly next to each other.
Yes. So it is. So what happens with Ryker is, because we are registered tax advisors, we are allowed to provide advice on tax, but we're not registered accountants. So we're not going to do your tax return. We'll work in conjunction with your accountant to ensure that you have a plan in place to mitigate tax in the long run. So we are tax advisors, but we are not registered accountants.
Okay. So that's a good one to think about here for brokers as well, because when you come across low doc, alt doc type of clients and so forth, maybe that's just another question you could add into your wheelhouse there in terms of what should ask your clients to actually know your clients as well, right? So maybe they don't want to do a full doc loan and they don't want to present full financials. And then that might go, hey, well, maybe you do earn a lot of money. Maybe you haven't been paying super. Maybe this is, putting out there. Maybe you want to have a chat to a tax planning business, which is Ryker's. So,
yeah, exactly. We hear a lot of clients that, they're thinking of selling a business, they're thinking of selling an investment asset, and they want to ensure that they don't pay, an overly large tax bill at the end of the financial year. So they want to plan for it a little bit better. So we can look at the modeling behind that and put in place strategies that are going to mitigate their overall capital gains tax implications.
Yep, fantastic. Sorry, man, I just jumped in there.
No, you're right. Yeah, that's a good pickup as well. So look, in addition, we hear a lot about SMSF lending, especially amongst the brokers. So if we have any clients that are relatively inexperienced in terms of self-managed super fund, they're inquiring around borrowing within self-managed super fund, or they have a desire to purchase property via self-managed super fund, particularly where you have clients that are growing their investment property portfolio and they're tapped out in the individual name in their own individual entity. They're looking to expand and take advantage of their superannuation. We can not only provide assistance with setting up, but we can also look to provide the investment strategy and the financial advice around maintaining that self-managed super fund as well. So we work in conjunction with a number of SMSF administrators that will help us do that for you, as well as put the advice in place for your clients as well.
Okay, so that's awesome.
Moving on to cash flow and budgeting. So we talked a little bit about clients that have inconsistent income or fluctuating income, particularly amongst your sole traders or self-employed clients. This is, advice that we can help out and put in place to ensure that they have, a decent cash flow that looks better on paper and ultimately increases their borrowing capacity. Where you have people that have an inability to save through poor budgeting practices, this is normally your first-time buyers because they're typically your younger clients that have a lower income and they can't really accumulate much for a deposit. They have somewhat constrained borrowing capacities. And that being said, we do have a lot of experience putting together financial advice for first-time buyers, particularly around the first-time super saver scheme, where you can make tax-effective contributions to superannuation that mitigate tax, accumulate funds within superannuation, and also allow you to accumulate funds for a deposit for a client's first home as well. So there's a few different benefits there for that particular client where you're sort of unable to accumulate a deposit fast enough, particularly for first-time buyers. You can use the first-time super saver scheme, and that alleviates a number of problems that they might be facing as well.
Yes.
We have clients that have declining health. They might have adult children with power of attorney, or they might be approaching preservation age or retirement age. So for those that don't know, preservation age is 55 to 60, depending on when you were born. And then retirement age is normally 65 and up. We can look to essentially see how we can accumulate more for your retirement. So as you start to approach that age, you start to think about retirement more and more. And that being said, we can look to implement specific advice around accumulating a retirement benefit that's going to last your life expectancy and beyond. So we want to see what we can do for your estate as well. How is that going to look when your estate is handed over to those non-dependent beneficiaries or any children that you have? And then just to ensure that your aged care fees are covered for those later stages in life as you start to prepare for some support in your older years. And then lastly, the most obviously, we have clients that are presenting significant debt. So this is probably the easiest trigger for advice. You might have clients that have significant debt, clients that have a review of their mortgage or their home loan or their lending structures, and they've gone through a major life event such as marriage, divorce, or birth of a child, or we have business owners in particular. So business owners, particularly where you have partnerships, we can look to put in place key person insurance and buy-sell agreements. So key person, where you have the loss of a key person in the business that either produces revenue or insure a piece of capital, a sum of capital rather, or buy-sell agreements for partnerships as well. So where you have a partner, you take out buy-sell agreement on each other. If either partner passes away, rather than carving up the business, that buy-sell insurance policy will actually pay out the estate rather than you having to literally carve up the business and use that to pay out the estate. So these are a lot of the advice triggers as well. If you are unsure about any of the advice triggers, please don't hesitate to get in touch with us. If you have a client that you're not sure if they're candidates for financial advice, I'd rather you contact us than go wandering down the track to know if we could have helped that client. Yep. In the next slide, we talk about the benefits to you as a broker or financer. Most importantly is we provide a revenue share of, normally that's 10% of the upfront and 10% of the ongoing revenue that we generate from any clients that you pass on to us. which at the end of the day, it's another line item in your income sheet. So ultimately, you want to be able to maximize the amount of income that you're drawing from each and every client. We are going to be actively looking to identify additional lending needs for your client, as well as any lending needs that they have for their friends or family as well. We're always going to refer them back to you, our referral source. And then we're going to be providing that client with an ongoing service as well. So where clients are eligible for our ongoing service program, we will meet with them regularly throughout the year. And we're also going to look to touch base with those clients that aren't eligible for that ongoing service to see if there's any additional needs that we can help them out with as well. And always point them back to you at the same time for any lending. The client experience overall is going to be uplifted because you've got 2 financial services professionals now that are going to be meeting the needs of the client and looking after them. We are going to help you meet your best interest requirements as well, and ultimately provide them with an uplifted level of client experience by providing those additional marketing assets to the client as well. So overall, it's going to be a much more professional interaction as well, because there's going to be 2 financial services professionals servicing the client on a regular basis. We're going to look to provide ongoing training to you as our team of advisors. We want to ensure that you understand the advice triggers and what you can do to put your client in a better situation as well. So we'll do one-on-one training. We'll attend professional development days. We'll do what we can to ultimately support your team in developing their skills and understanding what these advice triggers look like down the track. And then lastly, as we talked about previously, the real 3 key metrics that we want to have are around those 3 increase clients conversion from inquiry to settlement. We want to decrease turnaround time, and then ultimately we want to increase the client retention as well. We don't want them wandering elsewhere for you.
That sounds awesome, mate. And just for the people tuning into the video or the podcast, listen to this, right? If you're a broker, I mean, just being able to have another revenue stream that you probably didn't have before is a win already. So revenue share is up there already, right? What you talked about in the second part, which is the new referrals. This is because you're going to be reviewing the client's data, and you're going to see if they're going to need, say, especially if they're self-employed. I'm not sure if the audience listening and realizes this, but the average mortgage client goes back to the broker probably once in every 3 years. Whereas if you're a business client, you tend to go back to your broker once a year. Whether it's cash flow lending or whether you're buying asset finance or so forth like that. Do you have these triggers in place? And if you don't, what if Ryker can pick that up for you? Because that's going to make you look so damn good, right? So the ongoing service, obviously, that just goes into play with those 3 points I just talked about there too. So this is to me, it's a win-win opportunity for brokers.
Yeah, and another benefit, Dien, was we also look to share the F&A, the fact find with the clients as well. So that with yourself, as mortgage brokers, so that's going to actually reduce the administration time, highlight any additional lending needs and any changes in the client situation as well. So there's another benefit there.
Yeah, that's fantastic.
Yeah,
awesome, mate.
On the next slide, we talk a little bit more about revenue share. So at a high level, the average insurance revenue for a client is $3,000. We look to provide 10% as an upfront revenue share. If you refer 1 client a month, that looks like $3,600 a year. The average superannuation revenue per client is around $3,500. Again, assuming you refer 1 client per month, that looks like $4,200 per year. We also have a general insurance and accounting arm of the business as well. So that's a nice little line item to include in your budget as well.
Like, I think it's more than just nice. It's more like if I was a broker, I'd be sitting here going, I've lost how much money? Right? Like this is revenue that's sitting on the table. We talk about this all the time. Revenue talk, you're missing out money or you're leaving money on the table. You literally are. You don't have to hit all those things. Let's say even if you just hit one of those things, that's the insurance revenue, that's for almost $3,500 a year that you could have earned that's just gone to someone else, because at the end of the day it is going somewhere.
100%.
Yeah.
And ultimately you're looking after your clients. You look like a hero in front of your client, number one, and then you want to make sure that they become sticky, they become in your wheelhouse. So that being said, you want to ensure that you're looking after the client. They think you're a hero and you're getting paid for it at the same time.
You haven't told me anything bad. So yeah, but I definitely I'll be emailing everyone else that sheet, obviously, because I actually do want the audience to really look into this. I mean, if you look at just going back to the sheet now, like I said, it's just I'm sitting here and I'm flabbergasted. This is just one deal per month. It's not hard.
We have some referral partners that are averaging around about $5,000 a month. They're doing between $50,000 and $60,000 in revenue share per year.
Yep, that's awesome. Well, all I can think of is, and I'm just going to tell people this is like, how many deals are you doing per week? That's all it is. You should really be doing one at least a week, right? So it's not hard to add this into your behavior repertoire, because it's not just nearly just ticking that box. Everyone goes through a home loan application, and they tick. There is a box that has your client speaking to an independent financial advice and so forth. It just ticks it. Just I wouldn't say shits and giggles, but I think we just tick it because it's easier to do it, right? But the client doesn't want it or whatever. But really, just say, hey, it's not gonna cost you any more, just to have a chat. So this is a win, basically.
Yeah, awesome. On the next slide, we've got a few case studies just to sort of re-highlight those advice triggers. We had a client, Katharina, who she was looking to expand her property portfolio, and she was having trouble, bridging the gap. It's often between, property number 2 and property number 3 that they have trouble making that leap. And what we were able to do for her is we were able to implement advice strategies that meant that she could save, it was more than $7,000 per year in income tax, and ultimately put this towards her next property. So this enabled her to accumulate a deposit, increase her borrowing capacity because she wasn't paying as much tax, and then purchase her third investment property. So these are sort of win-win-win scenarios where we have, the client wins because they meet their goals. The mortgage broker wins because, they had additional lending needs. And ultimately, we win as well because we got to help our client out. So these are win-win-win on all sides scenarios as well. Our next client, Lynn and Jeff, they were facing a hefty capital gains tax bill as a result of selling an investment asset. They were reluctant to sell, but it meant that they were more than likely going to need to sell an investment property to pay their capital gains tax, which would have constituted double CGT. They would have had to pay CGT to pay the CGT.
Yeah.
However, luckily they came and saw us because we actually reduced the CGT bill from $200,000 all the way down to $68,000. So they didn't need to sell an investment property. The mortgage broker kept the debt associated with that existing investment property, and then they got to save money. They got to save more than $132,000 in CGT, which ultimately, again, was a win-win-win for all parties. The client got to keep their investment property, the mortgage broker got to keep the debt on the investment property, and we ultimately got to help our client with their needs.
Yeah. The client could have gone on a really nice holiday after that.
Yeah.
And buy a car and have money left over.
Yeah, with the $130,000 for sure. Yeah. And our last client, unfortunately, she ran into a case where she was diagnosed with breast cancer. So these are the, we pray it never happens, but just in case it does situation. Our client was referred by a mortgage broker who encouraged her to take out personal insurance. Unfortunately, she was diagnosed with breast cancer. However, because she had a comprehensive insurance policy out with her income protection policy, she was able to undergo treatment without worrying about any other financial burdens that she had, just like her owner-occupied loan repayments. And ultimately, it meant that she could take time off work, she could continue to make loan repayments, and she got to sleep at night easier, knowing that she didn't have to worry about that while going through treatment. So this isn't really a win-win-win situation, but it's making the best of a worst-case scenario, where ultimately we want to, when we're answering that question, what are you going to do? If in the event of death, injury, illness on your fact find, we want to make sure that we're legitimately helping the client out in these situations, because life happens. These things happen, and we need to make sure that we're working in the best interest of the client.
Yeah. I think for the newer brokers out there, right, it's going through your first 2 years as well. This is something that you will definitely have to put into your behavior repertoire. You're putting people into massive debt. Let's be honest, right? You're putting them massive debt, especially if you're going to deal with the first homeowners. They're usually young couples who probably yet to have a child. When they do ultimately have that child, realistically, the wife or one partner stays home to look after the child, right? And there's only one person working to maintain that loan. What would happen in the case that something bad happens to that person, right? So, worst case scenario, something bad happens to them, they then, the surviving party then starts legal action against you, the broker, because you didn't do the right thing to help protect their asset, and so forth. So, do yourself a favor and just, at the very least, make this a trigger point to have a chat to Ryker.
Yeah, 100%. They're probably the worst case scenarios where you have a family and, either a spouse or partner, they have become injured, ill, or God forbid, they've passed away. Then the surviving partner has to then think about, well, what do I have to give up? Because as a result of not having, some form of life insurance in place, I have to, downgrade my education for my child. I have to look at selling the house. I have to look at, scaling back on our expenses because we can't make ends meet with our current lifestyle expenses. And they're the situations that you don't want to be in, having, just lost a loved one. Or even worse, if you have a loved one that's totally and permanently disabled, they require ongoing care. Then they have additional medical bills associated with their lifestyle expenses. They're no longer able to produce an income, and they still have these things to take care of as well. They might need to make changes to their owner-occupied dwelling or wherever they're living because they have additional, disability support needs that need to be attended to. These are all things that people really don't think of or they take for granted. And it's
they also make the mistake that they think that they've got this inside their super as well,
yes,
which is usually not enough. So don't I would say, as a broker, this is it's not really your wheelhouse to discuss, but let someone else help you with this, because the last thing you don't want, I'll be honest, like, yes, it's god awful what may happen to the client, but when something like this triggers an audit on the file, and then the file then gets audited to go, did you do the right thing by the client? And if you found that you haven't been, and you can't just say, here's a tick that they said they don't need financial advice, you're going to lose your business. That's not nice either, right? So
even if you did have the conversation with the client and the client just said, oh, no, don't worry about it. Like, just the emotional guilt that you'd feel as well, like knowing that you could have pushed them a little bit harder to go and have a review of their insurances.
100%.
Yeah.
Anyway, let's move on from that.
So it's real life. Yeah. Yep. It's real life at the end of the day. Yeah. So on the next slide, we talk a little bit about how to best get in touch with us. We are keen to explore, partnerships where we can help you out. We want to work closely with you and your team to provide training and support. Any additional questions that you might have, we want to be your trusted financial advice provider for you and your clients. Any questions that you have, if you have a client that we can help, please don't hesitate to get in touch. You can contact us on the 1300 number, 1300 179 537, or hello@rykercapital.com.au. Or if you've got your phones out, you can scan that QR code. That will go to an online form that you can send any questions that you have, or any client scenarios that we might be able to assist with as well there.
That's awesome. Yeah, the QR code might be a bit small for the scanners, but I'll definitely put that into the chat. But otherwise, what Finance and Coffee is going to do is we are also going to be having a secondary home for the community as well. There will be a special small space for Ryker Capital to chat about insurance needs and so forth for your clients. And so you can jump in there. You can watch this video here. There'll be other clips in terms of how you can assist your clients as well. But really, this conversation is basically, like I said, you are assisting your client, but the bonus part is you're going to get additional revenue, which you probably didn't know that you could get. So it's a win-win here. Am I missing anything else, Gianni? Is that right? Or
no, Leah, please don't hesitate to reach out. Even if you have questions on the Finance and Coffee Facebook group. Yes, we are part of the networking group as well. Tag insurance or superannuation on the Facebook page and we'll be notified. And then, yes, we have our own subgroup on the networking site as well. We've started posting on there. So keep an eye out for any webinars or any posts that we have, particularly where they apply to client scenarios that you have as well.
Brilliant. Gianni, thank you so much for your time today, mate. Looking forward to having a chat to you again later on the year, or probably next year, to be honest, at this point in time, and see how it goes. But like for the audience here, I do recommend you review this video again. Some of the questions in this video will be in the end of year quiz. There is a nice travel prize there. So if you've been to one of our award nights, you know how the quiz works. It's not about getting 100% right in the quiz. It is actually getting the highest score. So unfortunately, it means you're going to have to play and replay the game. And the highest score will get a pretty nice travel prize to be announced later on. Okay. But apart from that, Gianni, thank you so much for your time, mate.
My pleasure. Thanks so much for having me on, Dien.